Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. The first quarter is over, and that means that investors are going to get answers to what happened in the first quarter and what do financial trends look like starting in 2023 in just the next few weeks. One of the companies that has a lot of questions is Disney. And I have 5 questions that I would like the company to answer when it releases first quarter results. I think we'll get an indication of where the company is headed under Bob Iger, who is now starting to leave his imprint on the company once again. My name is Travis William. Thank you for watching Rive Investing. Please subscribe here on YouTube for all my content and turn on notifications so you know when a new video comes out. Now, Disney has a number of questions early in this year, but the first one that I want to look at is how quickly the linear TV business is declining. This was really a profit center for Disney for the last 2 decades. And it's where Bob Iger came from when Disney bought ABC, then came with ESPN, but now that's starting to decline. The cable bundle in particular has been in decline for a number of years now, but those numbers are starting to fall off a cliff. Disney has kind of patched that hole a little bit by raising prices specifically for ESPN, but that's bundled in together with all of the other Disney networks and services. So what does that look like in the first quarter? Because I don't think that we're going to see positive trends, but how long can we expect that business to keep cash flowing? That's really going to be the question for Disney and for investors long term, because the answer to that question is going to drive what the company does, how all in it goes on something like streaming. Next to the second question is on the streaming side, the Disney Plus side of things, are we going to get to profitability in 2023? I think the answer could and should be yes, because Disney did raise prices late in 2022. So we'll see that start to hit the streaming side of the business. They've also had some cost reductions that are going to start to impact eventually. And a lot of the cost reductions that Iger has put in place since becoming CEO again really come down to cutting the costs that are going into the streaming side of the business. Want to focus on basically tentpoles, really the content that you know from Pixar, Marvel, and the Star Wars franchises. And then also filler content. So the shows that have been around for a long time that people find really identifiable on their streaming services, just the kind of things you watch at night when there's nothing on. But can that business get to profitability? To add to that, what's going to happen with Hulu? Right now, Disney has Disney Plus, which is kind of a core. It has Hulu, which it owns about 80% of, and Comcast owns the rest of it. Disney actually has to buy out Comcast at a predetermined price. But can there be a negotiated solution there? And then also has ESPN Plus, which is another added service. And I'll talk about sports in just a second, but we have a lot of questions about what's going to happen with ESPN Plus. But that series of streaming services, those 3 services right there, really need to get to profitability soon if Disney is going to continue pouring money into this business. And really the way to do it is grow subscribers and increase the price that customers are being charged. So want to see some progress on both of those fronts. The third big question is, are the tentpoles saturated? Especially on Disney Plus, you've seen a lot of content from Star Wars. So is that something that people are still interested in watching? Is Disney going to cut back on those? Disney, I believe, has made over 30 Marvel films since acquiring Marvel. That's a ton of films, and I don't know if there's appetite for all that many more at the same kind of billion-dollar box office that they've had in the past. So that's going to come from the studio business. So look at what those studio business numbers look like. Look at what the spending plans for the future look like, because I think there's at least some evidence that some of the tentpoles are starting to become oversaturated now. Disney has a ton of content that they can build on and lots of characters that they can expand. But that's going to be a question that investors are going to have to think about in the future. I alluded to this, but the fourth thing is, what is the future of sports in Disney? One of the big moves that Iger made after coming back was splitting off ESPN and having that be its own division within Disney. That means that ESPN is going to be reporting its own numbers. We're going to see how profitable they are or are not. They're not going to be folded into the whole linear network the way that they have been for decades at this point. That puts a lot more focus on sports, and I think could mean that eventually ESPN is either split off or sold, or it becomes more of a sustainable business. And I don't know exactly what that looks like in the future, but this is something that the sports leagues and all kinds of companies out there who have sports rights are trying to figure out right now. The numbers for a lot of the sports league, the rights to distribute their games have been going up for decades. And that just is falling apart as the linear networks are starting to have less and less money come in. The streaming networks are just not able to pick that up at this point. So what kind of deals can Disney make to keep something like the NBA or NFL We don't have an answer for that, but given the changes that they made last quarter at ESPN, putting it in its own business, we're going to at least get a little bit of insight on what the strategy is there, what the cost structure is going to look like, and what the financials of ESPN and the sports business are going to look like at Disney in the future. And the final thing is there a new theme park on the horizon? You may not realize this, but theme parks are one of the most important pieces of the Disney puzzle because it takes the content that they're making, the movies that they're making, and they make them popular at theaters, on TV, and home movies. And then people pay a ton of money to go to theme parks and experience those products in real life. And if you look back on the theme park history here, Disneyland opened in 1955, Disney World, 1971, Tokyo, 1983, Paris, 1992, Hong Kong Disneyland, 2005, Shanghai was opened in 2016. What's missing there is what's coming in the next few years. Based on that cycle, we would expect a new resort in the next few years. That's probably not going to happen. But is Bob Iger going to put something else on the map for Disney over the next decade or so to start building out a new theme park? I think that's going to be another key piece of growth, especially as there's become more competition in the market. A lot more of the studios have followed Disney's model into the theme park business. We've seen even Nintendo do that. So I think that could be a really good use of capital given how profitable those theme parks are. So that's another thing I want to flag. What does the financial results look like for theme parks? Because that's a very important piece of the business for Disney. But also, is there some sort of growth coming in the future? I would like to see that as a Disney shareholder. And especially given the popularity of those theme parks, I think there's a lot of opportunity for growth there. But those are 5 questions that I'm looking for Disney to answer with earnings. What questions do you have heading into this earnings report? I'd love to hear your comments in the comments section below. Don't forget to subscribe to Drive Investing. Thanks for watching, everybody. I'll see you here next time.